And coming to the intercompany journals. Okay, we still have got time. Okay. Okay, so I will try to explain you what are these intercompany journals. So this is where your intercompany segment, which is assigned under your chart of accounts, will come into picture. Okay, so what are intercompany journals? So intercompany journal, as the name itself says, is a journal between two different legal entities or two different companies. Intercompany journal between two different companies. So we have got a company of say 01, which is Reliance Communications, and Reliance Textiles 02. So let us assume Reliance Communication is purchasing something from Reliance Textiles. Then obviously Reliance Communications needs to pay to Reliance Textiles, and Reliance Textiles will be creating a kind of an invoice to Reliance Communication. Even though these two are falling under a one legal entity, one Reliance group, but they are defined as a separate legal authority. They are defined as separate legal entities. So every company is different. So if one company is purchasing goods from some other company, even though both are falling under Reliance group, then you need to create an appropriate intercompany entries for those transactions. Okay. So generally for the intercompany journals, most of the cases it will be coming from your subledgers. But for some reason, if you want to pass some kind of an intercompany journals within the GL, okay, some kind of intercompany adjustment, then we will pass those entries in the GL module. So one example would be, I want to move an expense amount of say $1,000 or 1,000 INR from company 01 to say company 02. So how do I do that? So simple example would be simple business scenario would be, there is one particular building. For that particular building, the rent payment is say 50,000 rupees, and this particular building is used by both Reliance Communications as well as the Reliance Textiles. And Reliance Communication is using say example 60% of the entire building, and Reliance Textiles is using only 40% of the entire building. Okay, this is Reliance Communications and this is Reliance Textiles. Okay, and this is the rent for the month of September 17. So generally in this case, 30,000 should be paid by Reliance Communication to the property owner, 20,000 should be paid by Reliance Textiles to property owner. But what could happen is, total 50,000 is paid by the Reliance Communications to the property owner, and then he recharged or transferred that for 20,000 amount from Reliance Communications to Reliance Textiles. That could happen in a real scenario, like a property owner may not get the check from all the Reliance companies. He'll just get one check from say Reliance Communication. Maybe it could be some kind of an headquarters company or something like that. Okay, you can get that check from the Reliance Communication, and Reliance Communication can share the part of the rent which belongs to Reliance Textiles using an intercompany journal. So how can we do that? So you want to move 20. This is rent for Reliance Communication is 30,000, and Reliance for Textiles is 20,000. Now you want to move 20,000 worth of rent amount from Reliance Communications to Reliance Textiles. Okay, how do you do that? Okay, so the first thing is, when you are paying the 50,000 rupees to your property owner in Reliance Communication books of accounts, the journal entry would be with a company code of 01, department of say 000, rent account, and all others maybe say 000 something, debit 50,000 rupees, 0100, cash, and all other being maybe 000, credit 50,000. Okay, so 01 company, that is Reliance Communication, has got an expense of 50,000 rupees towards rent. Now it want to transfer 20,000 worth from rent account of Reliance Communications to Reliance Textiles. So what you need to do, journal entry would be, Reliance Textile should be debited to the extent of 20,000 rupees. So Reliance Textile is 02 hyphen 00 hyphen rent Okay, and to that extent of 20,000 you should decrease the Reliance Communication. So Reliance Communication will be credited. So this is the intercompany journal. So first of all, do you understand this journal? Then I'll get into further more details, including the intercompany segment. Did you understand?
Arvind, can you repeat? No,
Okay.
can you repeat?
Okay. So assume that there is a business scenario wherein a rent of 50,000 is paid for one particular building, okay, and that particular building is given to Reliance Group, and within the Reliance Group, Reliance Communication is using that particular building for the 60% of the space, and Reliance Textiles is using 40% of the space. Okay, so that means ideally Reliance Communication should incur an expenditure only for 30,000 rupees, and Reliance Textiles should incur an expenditure for only 20,000 rupees. But in this case, Reliance Communication has paid the entire 50,000 rupees to the property owner. So when it has paid the entire 50,000 rupees, it has passed this particular journal entry. Under 01 company code, which is Reliance Communications, rent account is debited with 50,000 and cash account is credited with 50,000 rupees. Okay, but we do not want to, under Reliance books of accounts or under Reliance Communications, it do not want to show 50,000. It want to show only 30,000, because only that 30,000 belongs to Reliance Communication. Remaining 20,000 belongs to textiles. So what Reliance Communication needs to do is it needs to recharge that or allocate that to, I mean, that's a business term, allocate that extra 20,000 to Reliance Textiles. Recharge, allocate, cross charge, or transfer the 20,000 to Reliance Textiles. So it needs to pass an entry of 02 rent debit $20,000, 01 rent credit $20,000. You are crediting a rent account by $20,000. So if you look at these two entries, this entry and this entry, the net impact of this entry after passing this intercompany journal is in Reliance 01 company code for a rent, the net amount is only $30,000. Okay, 50,000 is a debit and 20,000 is a credit. So net impact is only 30,000 rupees, and 20,000 is transferred to Reliance Textiles. Okay, so there are no issues with this entries. You can straight away you can pass this entry, which is fine. But when you pass this particular entry, I mean, from a business logic perspective, you are transferring 20,000 to Reliance Textiles 02, and you are moving 20,000 from Reliance Communications, so you are crediting. So from a business logic perspective, 02 is debited, 02 company is debited, 01 is credited, and the general entry is balanced. Okay. Apart from general being balanced, there is a concept of balancing of the journal by the balancing segment. That is, the journal not only should be balanced by the, I mean, the entire journal should not only be balanced, but it should also be balanced by the company code. So at a company code level, it is not balanced. Am I right? At a company code level, it is 02 debit 20,000, but there is no corresponding credit. For a
Yes, yes.
for a company code level, again for 01 there is a credit, but there is no debit. Okay, that's where intercompany accounting comes into picture. Okay, if you pass this particular journal entry rule, if you pass this particular journal entry and then you enable your intercompany rules. If you remember, like in the ledger setup, I have not yet completed the intercompany rules. Once you complete the intercompany rules, what will happen is system is going to create the corresponding missing lines with a description of intercompany lines added by the posting program. Okay, so the missing lines will be 02 intercompany payables account. So this is sub account, this is a product, and intercompany segment is the last segment. Zero one intercompany receivables. This is sub account, this is product, and this is the intercompany segment 02. And this would be 01 is credited here, so 01 should be debited here. Okay, so this forms a journal. Okay, and how does system understand from where to bring up this intercompany payables and intercompany receivables? It will be mentioned in our intercompany rules. Okay, so what system is doing is here for the, this is the entry which you have passed. These are the two lines which are generated by system. So you will be able to see the description for these lines as intercompany lines added by posting program. So whenever you post the journal entry, that's where these lines will be added. At the time of data entry, you'll be able to see only these two lines, and these two lines are added by the posting program. So how system create these lines? As far as the 02 is concerned, there is only debit, there is no credit. So it is going to create this credit line. Okay. And as for 01 is concerned, there is a credit, there is no debit. So for 01, it is going to create the debit line. So for 02, you can see 02, it will be the department will be 00, and there is something called intercompany payables account which will be picked up from your intercompany rules, and last intercompany segment will be 01. So that's how when you run some reports, you can understand that the relationship, this particular entry is because of the relationship between 02 and 01. And when you run your some reports with an intercompany receivables account, for 01 line, you will be able to see 02, because this kind of entry has happened because of the relationship with 02, or because of some kind of a transaction with 02. Okay, is it clear? And any questions? I know it's a bit difficult.
This lines will be created on both the company codes or only one? Like currently we're looking at the textile company code, right? Or
no, currently we are looking at Reliance Communications. So this particular line, so if you observe, if you go back to our chart of account structure, Reliance Communications, Reliance Textiles, both are in one ledger. Okay. I'm taking a simple scenario. I'm not even taking a scenario between this and this. So I'm taking a simple scenario wherein there's an intercompany transaction between this company and this company, but both are falling under same ledger. Okay. So both are falling under same ledger. So user will be able to create this entry. Okay. In GL, user will be able to create this particular entry, and system will create these lines, and all this entire journal is falling under INR ledger, because INR ledger will allow these two lines. Sorry, these two company codes. Okay.
Okay, Arvind, just one point. So the last segment, right, in intercompany segment. So for 02 company, you have given intercompany segment as 01. For 01 as 02. What is the relation between that?
Okay, because yeah. So this is again a simple scenario wherein it's an intercompany journal between only two legal entities, and those two legal entities are falling under one ledger. You can even go into more complex, multiple legal entities, and multiple legal entities are falling under different ledgers. So we are not getting into that. So in this simple scenario, you can see that this particular journal has got only two companies, 02 and 01. Okay. So when system is creating intercompany lines, it understands that what is the other company code which is used in that particular journal. The other company which is used in this particular journal is obviously 01. So for 02, the other the other company which is involved in this intercompany journal is 01. So that's the reason the system has assigned 01. And for 02, what is the other company which is involved in this journal? 02. So it has picked up this particular balancing segment of the other line and populated it as the intercompany segment.
Okay. So basically this 0201 is the intercompany segment is like the connection between the company and the corresponding other company.
Exactly. Yes. Right. In simple layman terms, yes, that's what it is. Okay. So now we did not complete the intercompany setup in the ledger. So now if you pass this particular journal entry and say post the journal, it will throw into an error message saying that the journal will not be posted because system is not able to drive these intercompany relationships or intercompany rules as under the particular ledger. Okay. So we'll complete the intercompany accounting part, create the journal, and then post the journal, and let's see how system create these intercompany lines. Okay.
Hey, Arvind, quick question. The entries, right? Where do you balance the cash account, which is the above one, 0100 cash 50,000?
You need not balance the cash account. So this example is basically moving the rent from Reliance Communications to Reliance Textiles. So cash is going out. So whether it's a Reliance Communications or Reliance Textiles, cash is already going out from Reliance Communication. so you need not balance that. So that is the reason why you got your intercompany and intercompany payables and intercompany receivables account. So what we are doing is, in this example, Reliance Communication has paid 50,000 out of your pocket, but it needs to get the 20,000 back from the Reliance Textiles. So that is the reason why there is a intercompany receivables line here under 01 for to the extent of 20,000. So down the line somewhere it needs to get the 20,000 rupees from Reliance Textiles. Okay.
Okay. Okay.
Okay. Now
And
go
it
back.
considers this 50,000 will be going out from that ledger through Reliance Communication.
Yes.
Correct?
Yes.
Okay.
Okay. Now go back to the accounting setup manager, where you have defined your ledger. Setup, financials, accounting setup, accounting setups. Okay. Bring up your ledger. So what is your ledger name? Reliance INR. Okay. So this is the intercompany part. Define intercompany accounts to account for transactions across legal entities. So now our journal is a journal between two legal entities. So complete this particular part. So click on update. Okay. So go to Reliance Communications. There is something called defined relationships. Okay. Click on this plus. So generally, so in this example we got in this example, like I am actually now trying to set a relationship from Reliance Communications to Reliance Textile. So you can use the transacting balancing segment value or other company as 02. But instead of doing that, what I'll do is there is something called all other. All other. So that means in one single go, I am actually setting up a relationship from Reliance Communications to all other companies. It could be Reliance Textiles, Reliance Telecom, Reliance Oil and Gas, or Reliance Software. So instead of selecting a particular company code, that is like a relationship between 01 and 02, 01 and 03, 01 and 04, 01 and 05. If you want to do that way, then you need to create so many lines. But instead of doing that, I'm just using all other. So that means in one single go, I'll be able to set relationship from 01 to all other companies. Okay. Click on define accounts and click on, there is something called intercompany receivables account and intercompany payables account. Click on plus button. So specify your intercompany receivables and intercompany payables account, which is nothing but these accounts. Okay. This intercompany payables and intercompany receivables. Details are available in your BR100. Okay. So this is the intercompany receivable account. Search for this. If it doesn't exist, click on create, select, and start date, just put generally for in all the implementation project we put the start date as 1st January 1951, so that even if you create some kind of a backdated entries, if the periods are open, it will allow you to use this intercompany relation. Otherwise you can even leave it as 10th of September. So this is the default date. If I put the 10th of September, so that means if you create any intercompany journals on with the date of say 5th of September, then these rules will not be applicable. So always use either 1st January 1951, or what we do is we just use the first data for first period in our ledger. So what is our first period? August, right? Yeah, I'll just use 1st of August 2017. And then intercompany payables. This is my intercompany payable account. 2370. And always use the intercompany segment as 00. System will appropriately take care of populating that intercompany segment with the appropriate other company in the journal. Okay, so started as 1st of August 2017. Click on apply. Go back to the screen. So we have done that for the Reliance Communications. So similarly, do the same thing for the Reliance Textiles. So this rule will be used if for some reason say Reliance Textiles has pays the rent in our example, and Reliance Textiles want to cross charge that to Reliance Communications. Okay, so we are setting up the rules in such a way that it is going to take care of all the possible scenarios. So for Reliance Textiles, it will be everything will be same, just the change in the company code. So 1810. Okay, so for intercompany payables, we can use this one. Click on apply. Go back to this. Okay, now the relationship is completed for both communications as well as the textiles. Okay, now try to enter a intercompany journal. Journals, enter new journal. So Reliance rent adjustment journal between com and textiles. Okay, so our entry would be 02. Yeah, so 02 should be debited, right? 02 department, and what is the rent account? Or rather, I'll start from the first entry. So first, this is the entry which is passed by the Reliance Communications, right? It is debiting a rent account and creating a cash account and paying this for 50,000 to owner, property owner. So what I'll do is I'll change the description. 01. Okay, rent expense account, $50,000 or rupees. Cash credit. This would be Reliance Communication rent payment. This particular journal entry. So there should not be any issues because the journal entry is balanced and the journal is also balanced by the company codes. Okay, so that completes this particular part. Okay, now we'll try to enter this part. Now charge this 50,000 or move 20,000 out of this 50,000 to Reliance Textiles. Okay, pass the next entry. New batch. Reliance rent adjustment between com and textiles. So use the same name even for the journal name also. Account debit the rent account of Reliance Textiles and credit the rent account of communications, because you are moving 20,000 out of communications to textiles. So 02 rent, 20,000 and credit the rent account of communications. Okay, if you want, you can put some appropriate description here. Okay, so now if you observe here, journal is balanced. It's 20,000 and 20,000, but it is not balanced by the company code. For 02, it is 20,000 debit, but there is no corresponding credit. For 01, 20,000 is credit, but there is no debit. So from a standard functionality perspective, always general should be balanced, as well as general should also be balanced by the company code. That is at a balancing segment level. So 01, 02 are the company codes are the balancing segment. The general should also be balanced at this level. If the general is not balanced by the balancing segment, that's where the posting program is going to create extra lines here. So now what we'll do is we'll try to post the general and let's see what will happen. Post. Okay. Now wait for the posting program to be completed, and once the posting program is completed, you can come back to that particular screen and check whether system has created any extra lines, and if it has created any extra lines, what is the description of those lines.
Arvind, before it get complete, right? So what you're saying is, in the general level, the accounting entries will not be make any significance in terms of the company code. It just needs to balance the debits versus credits, no matter what combination you selected at the general level, right?
I didn't get your question. Sorry. Come again. Can you come again?
The general level, if you notice, this 20,000, the debit line is referring to 02 company, and the credit line is referring to 01 company code, right? But this is a simple general. In order to save this general, you simply need to have debits versus credit should be balanced, no matter what account and what company codes your combinations you're selecting.
Exactly. The first important standard functionality within Oracle is general needs to be balanced. If the general is not balanced, and if the suspense account is enabled, then the balancing figure goes to the suspense account. That's a different thing. Okay, we are talking about simple scenario where the general is already balanced. Okay, general. So debit is $20,000, credit is $20,000. General is balanced, but it is not balanced by the company code. If it is not balanced by the company code, you need not take any action. Once you click on post, the posting program is going to create the corresponding intercompany payables and intercompany receivables line based on our intercompany setup.
Okay, so the question is, in the real scenario, whenever any accountant or the person entering this general manually, did they get scenario to enter in this manner, like where they can choose different company codes?
Yes, I mean, so these lines which are passed by intercompany posting program are kind of from a normal accounting perspective. They all knows that whenever they pass such kind of an intercompany journals, that is like wherein your debits and credits are not balanced by the company code, system will create the corresponding intercompany lines, and that is what they want. If they do not want that, then what they need to do is they should never pass a journal wherein the journal is not balanced by the company code. They want that particular intercompany lines to be created. That's how Oracle even provide that functionality of intercompany accounting, because that's from a normal accounting perspective.
Okay.
Maybe in addition, we can also categorize this differently, right?
Yeah, if you want, instead of using a category of adjustment, you can call it something else, intercompany rent adjustment or something like that. Okay, now here you can see this is the entry which user has passed. System has added these two lines, intercompany. You can see description as intercompany balancing line added by posting program, and here you can see if you look at our spreadsheet, 02 got credited with $20,000. So 02 got credited with the $20,000. with the intercompany segment of 01, and this is the intercompany payables account. And 01 got debited with $20,000 with an intercompany segment of 02, and this is the intercompany receivable account, which is what I had explained in the spreadsheet. Okay, so how system is arriving at these things? First thing is, at a 02 level, it is going to check what is the debit 20,000. So at a 02 level, credit of 20,000 is missing, so it has created this line with 20,000. And as far as the company code is concerned, it is just picking up from here. Department, it is copied from here, and all other segments also it copies from here, except the account and the intercompany segment. As far as the account is concerned, it is going to pick up the intercompany payables or intercompany receivable account, whatever is specified in the intercompany definition just now. And the intercompany segment, the last segment, is derived based on the what is the other company code involved in the other line. So in this case 01, so that is the reason 01 is used here. And for the 01 company code also, for this particular line, 01 is credited here, so system needs to debit 01 with the 20,000, so it has used 01 with 20,000. Intercompany segment is the other side, and all other segments is just copied from whatever is being used here. So here we have used department, sub account, and product, whatever is used, same is being copied here. Intercompany segment, as I said, it's bringing up from the other line, and the intercompany receivable is from the intercompany accounting definition. So any other questions on this?
Clear.
I mean, this 2370 and 1810, are these like balance sheet accounts, like asset accounts and
Yes.
the liabilities account? Or,
Yes, yes, because intercompany payables.
Okay, so on a broader, at a balance sheet level, the cash got reduced by 50,000, but again, we are increasing our receivables by 20,000 so that we get a balance of 30,000.
So if you ask me at a broader level, yes, out of your Reliance group level, cash is gone by 50,000, and the rent account is only 50,000 again, because from a 01 perspective, 50,000 minus 20,000 is 30,000, because this is a debit 50,000, create 20,000, and from a 02 perspective, it's 20,000. So 30,000 plus 20,000, it's still 50,000. So from P&L is still 50,000, cash is 50,000. And as for the intercompany receivables and payables, again 20,000, 20,000. So these two are again liabilities. I mean, intercompany receivable is asset, and intercompany payables is liability. So liability increased by 20,000, asset is increased by 20,000. So from an accounting perspective, everything is balanced.
So like this triggers only when it finds the new company codes, like a different company codes in an entry, right? Like what is driving it?
Okay, so the driving
what is driving this intercompany entry?
Okay, so the driving factor is when user has entered, he has entered only this part. He has entered only these two lines. So what system does is, when system is when you are posting this particular journal, the posting program, what it does is, it is going to check whether this particular journal, it is going to check two things: when the entire journal is balanced. If the journal is not balanced, irrespective of any company codes, if the journal is not balanced, then suspense account will come into picture.
Suspense account, yeah.
But okay, now in this scenario, the journal is balanced, so no question of suspense account. Now next question is it balanced by the company code level? It is not balanced by the company code level. That's where it will pitch in and generate this intercompany lines.
Got it.
Okay. And if you practice a lot, then you will better appreciate as to how system is doing. You can again get into so many different scenarios, like multiple legal entities. Now instead of 2, you can go for 3 legal entities, and you can go for 1 legal entity from one ledger, another legal entity from another ledger, and so many other permutations and combinations. Okay.
Okay.
Arvind, since we are in INR ledger, so can we enter accounts for 03 company also? I mean, can we 03 in sense the Reliance USD ledger company also? Okay.
So if you are passing such kind of entries, then it would be a bit tricky. So the entry will be something like, because 03 is not directly allowed in INR ledger. Okay. But still, if you want to pass that entry, what you can do is you can associate the 03 to company code of INR. Okay. And use something called some clearing company codes in between. So if you want to still use 03 company code in INR ledger, so that's one example wherein you need to associate 03 to your ledger at a there is something called balancing segment value assignment at the ledger level, if you remember, because 03 is not a legal entity under your INR ledger, so you need to associate 03 to balancing segment value assignment at the ledger level, then you can start using even 03 under INR ledger. So now, okay, now 03 is not assigned. Now let's see, like, if I start using 03, what will happen? What is the error message? New journal. I'll just say test journal. Okay. So even though in the drop down you will be able to see all company codes, whatever we have defined, but it will not allow you to select other companies. If I select say 03, let's see what will happen. Okay, use some account, some random. The balancing segment value is not valid for the current ledger. Okay, because 03 is not assigned. Now if you want to do that, you can go to
ledger options, right?
not ledger options. Within the ledger setup, okay, I can show you that.
I think this is the discussion we had, right? Your 9 series.
Yes. So that is, yeah, that's whatever I had given is one example, and yes, this is also another example. Wherein if you want to use a legal entity of some other company under the current company, but that's not a legal entity, because 03 you cannot associate as a legal entity here because it's not a legal entity which belongs to INR ledger. Okay, it's a legal entity which is already assigned under USD ledger, but still you want to use that particular company code. Okay, so you can go to this assign balancing segment values to the ledger, click on add balancing segment value 03, select, complete. Okay, now there is a request which got triggered, so wait for the request to be completed and then I will show you in the journal screen. Yeah, it's completed. Now go to journals, enter.
And in the Java page also we'll be able to see all the three under that ledger, right?
Yes, you can go to again balancing segment values ledger. See 01, 02 at a legal entity level, but still under ledger, and 03 here. Okay, there is actually, you can see ledger assignments.
Okay, got it. And can you cancel? No, cancel here.
What do you mean cancel? Okay.
Cancel. Here we cannot see.
No, because 003 is not a company belongs to these legal entities. It is a company belongs to a legal entity of other ledger, which is USD ledger. So once you complete the setup of this Reliance USD ledger, okay, under Reliance USD ledger, what is the company? Reliance Textiles. Reliance Textiles 03 will be the company code which you can see there. So it's basically for this kind of an adjustment entry, what you are doing is you are trying to use the company code or the legal entity of other ledger under this current ledger.
Okay, got it. Yeah.
Okay.
But in a general scenario, this is pretty much a valid thing, right?
Yes,
I mean,
this is pretty much a valid scenario. Even in maybe like when I'm explaining that, I did not get into that. Like yes, that's one of the valid scenario. Even we are doing that. We have got something called Australia ledger and New Zealand ledger. We are doing the same thing. Under Australia ledger, my company code is 150. Under my New Zealand ledger, my company code is 155. But there is some business requirement wherein they want to use 155 company code of New Zealand under Australia ledger. So what we have done is under Australia ledger at a legal entity level it's 150, but at the balance statement value assignment I have assigned 155 there.
okay, got it.
Okay, so I can show you that. Now select 03, sorry 03, some rent account or some account, that's fine, it's a depreciation some other account. Oh, sorry, complete the intercompany. See, now there is no error message because we have assigned. Now try to use 04 or 05, you will still get a same error message.
Okay, and one more thing. See, you are saying you will define these with separate numbers. Right. So, I mean, generally that separate numbers is not required.
What do you mean by separate numbers? I didn't get you.
No, see, when you define Reliance Telecom under Reliance INR ledger, you can use the same company code 03.
Yes, that's what I did now.
Right. But in the, I mean, when we were talking previously, you were saying these kind of things you maintain separately with 9 series something, right?
So
So
that
that is not a.
no, 9 series is an example from my business scenario. We are using the 9 series company codes, which are so in my case, 9 series are the companies which are used for some kind of an elimination functionality, and they are not really a legally registered companies. So in this
Okay,
case,
okay.
it's a bit different bit scenario, like wherein it's a legally registered company, but it's a legally registered company in USD ledger or like US, but that's not a legally registered company in India. But still, you want to pass some kind of an
Mhm.
adjustment entries. So that is the reason why you are using
Okay.
that 03 company code and assigning at the ledger level.
Okay, got it. Got it.
Okay. Yeah.
Yeah.
Okay. So that completes the intercompany journals. So it's already 11:30. So I'll proceed with the other things in my next session next week. So any other questions before I end this call?
Maybe you can have some practice
Yes. Yes.
exercises kind of thing.
Yes. I'll send that in an email. Okay. I'll give you all the details. So what to refer when you are passing the journal entries, whether you want to practice both the setups as well as the data entry, or you want to do a practice of only data entry.
Data entry, I think, should be fine because setup is a one-time process only.
Okay. So if you want to do what do you call practice of the data entry, I'll prepare a separate spreadsheet which talks about the scenarios to be created and what is the navigation which you need to use. Okay. I'll maybe
Okay.
give it today or tomorrow. Okay.
Yeah,
And also,
sure, sure.
okay, I can actually complete the what do you call the training material. The problem is when I'm creating a training material, I want a screenshots, and if I want a screenshot, I need to complete the setup. But if I complete that particular setup, then I'll not be again able to do the same setup in the training sessions. So that's the reason why what I'll do is I'll be preparing a training material only up to the point whatever we have explained in the class. So will that be fine? So that means
Yes, fine.
now if I create a training material of a secondary ledgers also, I can create the content. I can take a screenshot. If I want to take a screenshot, I need to create a Reliance secondary ledger. If I do that, then again in the class, I'll not be able to do the same thing. Then again, I need to use some kind of a dummy data there. Okay.
Yeah.
So that means what will happen is whenever you get my training material will be only for the topics whatever is already covered, and I think you will also better appreciate instead of going for the future topics, you can also refer only to the topics whatever is being covered and you can practice that. Okay.
Yeah. Yes, fine.
Okay, so if that's the case, what will happen is today I'll send you a training material which is prepared as of now. Maybe it could be only say 10 pages document or 15 pages. Next week when I send the same document, I'll increase the number of pages to say 20 pages. So it'll be the same document wherein I'll add the pages. That's how it goes. Okay.
Okay, fine.